as we know, Fed went from QE, quantitative easing, for 10 years, 15 years, with ZIRP policy, zero interest rate policy, to quantitative tightening, right? So lower the balance sheet, increase interest rates, which they did to combat inflation. Well, did they? Not really. Does it look like it? Does it look like in your lives, in the average American life, inflation is coming down? Didn't look like it. I mean, egg prices supposedly are hitting new highs, but not that, that's an important subject. But if you look at everything that you're paying over the last 3-4 years, they have all gone up 50, 60, 70%, right? From car insurances, your rent, the most important things, your daily spends, your food cost, everything has gone up. And is it coming down? No. That's because things go up fast and don't come down fast enough. But the other thing is your W-2s, your job income, keeping pace with inflation? I don't think so. I don't, adjusted to inflation, incomes in this country have actually declined. So you all have to factor that in. And the important thing for the Fed now is understand what's going on, right? If inflation is going to come back a second time around, is the pivot that they started last September with a 50 basis point interest rate cut, is it going to continue? Now, do they actually have to stop lowering rates? Why is the Fed lowering rates? Because the economy is slowing down. That's what they're seeing. And the other thing is the interest rate cost that I just discussed. When Fed lowers interest rates, the only time I've seen it happen in the past 30 years that I've been doing this is when they see trouble ahead. Fed does not lower interest rates if the economy is booming. And obviously they're seeing some troubling signs ahead and they're lowering interest rates. Okay. Well, that's called the Fed pivot. Is this pivot working actually? Well, I don't think it is, just for the fact that just when inflation is, rearing its ugly head again, they took a victory lap, said, oh yeah, inflation is down to 2%, unemployment is fine, GDP growth is fine, no worries. They're just gaslighting the American public. What they need to understand is that by lowering interest rates now, they may actually be fueling the fire of inflation for it to come back. And we may, I want all of you to go study a little bit of what happened in the 70s, late 70s. What happened in the late 70s? They did the same thing. They raised rates first, inflation came down a little bit, and then boom, the second leg of the inflation, came around, and this time they really had to raise the rates and then kill the, it literally killed the economy, put the economy in a recession. But am I saying it's going to happen again? Well, it seems like it. I mean, this pivot that they started is not working. The pivot is broken. It truly is. And, they probably lowered interest rates when they shouldn't. And as we know, Fed is always behind the curve, right? When they need to lower rates, they lower rates too late. And when they need to raise the rates, they raise rates too late. So the Fed pivot that they started last September, the bond market is not buying it. The stock market's buying it. All the hard assets are buying it because they're seeing clearly that inflation is not dead. So when inflation is not dead, and if the pivot is not working, what are you going to do? Because the projections for 2025 were to to lower rates 4 more times. Okay. And now it seems like that's not happening. So I filed the Coinbase letter. So is this the worst Fed pivot in history? That was a headline on X, on Twitter. I agree. I think this was the worst pivot in history. Since the Fed pivoted, CPI has risen to a 7-month high. So Fed is lowering rates while the CPI is increasing. That's going to just add fuel to the fire. I think they're doing the wrong thing. So, and here's a chart. There's CPI, coming back again. And this was in 2022, 2023, when Fed had to raise the rates and CPI came back with the, inflation was there. We got up to 6, 7, 8%. Okay, it slowed down a little bit, but now the Fed's cutting rates. Inflation may come back worse than 22, 23. So what is going to happen? Is the Fed going to keep cutting rates into an inflationary cycle? And the prediction markets that, I followed during the elections, specifically Kalshi, now they're predicting that the prediction market saying that 23% chance that rate hikes, not rate cuts, rate hikes, okay, may be returning in 2025. While, as we know, according to the last Fed meeting that I watched or I listened to, what happened? Fed said, okay, we're going to now take our time cutting rates. So they're taking the 4 rate cuts off the table for 2025. They said we may cut the rates in September. We may not cut the rates at all. It's data dependent. So they're just kind of changing the language. And I put a video out this week that is inflation dead. Please go check it out. And the CPI and PPI, consumer price index and producer price index, they're both going higher after going lower for a few months. And now that's putting the rate hikes on a halt. And is the pivot still going to work? I mean, I talked about this before, right? I talked about something called stagflation. Stagflation is a stagnant economy with increased inflation. The Fed is cutting rates because they're worried about inflation and the economy slowing down, okay? The Fed is seeing trouble ahead, so that's slowing economy. And now inflation is rearing its ugly head again, or not again, and not that it went anywhere. It's coming back again. So now what? Now what? Is the market pricing in a Fed pivot? Is the market going to price? I don't think it is at all-time highs. I don't think the stock market is I think the stock market is still swallowing the pill of a soft landing, which I definitely think is not going to happen now. And if the Fed says, okay, no more interest rate cuts, in fact, we're going to raise rates now, I see trouble ahead. I really do. But then that's going to add to the volatility prediction of mine. So, and the reason for that is multifold, right? When you're at all-time highs, okay, and old hard assets are making all-time highs, the markets are predicting something. They're predicting inflation coming back. They're predicting inflation not being dead. And the Fed has to do what they have to do. What does the Fed have to do? They're in a box because of horrible fiscal policy in Washington. Their monetary policy is just kind of put in a box. They're in, like right now, they're in between a hard place and a rock. They're seeing trouble ahead in the economy. They want to slow that down. They don't want to obviously, we don't want to go in a recession. Then we know the market's extremely expensive if we go in a recession. So the Fed saw that trouble ahead and started cutting rates, but now inflation is coming back. So now you're in a catch-22. If you keep cutting rates, inflation is going to completely get out of control, okay? When that happens, then your next pivot towards tightening is going to be much more severe than what they did in 2022, 2023. So now we're in a box. We're caught in a hard place and a rock. So Fed says, okay, we're going to halt the cuts. We're not going to cut anymore because they're seeing trouble ahead in inflation as opposed to seeing a slowing economy. So stagflation is something, there is no cure for stagflation. If we do get stagflation, yeah, I don't know. I think trouble is ahead. Again, I'm not saying it's imminent, but I think this year is definitely going to turn into a much more volatile year than 2023 and 2024. So